We're always keeping an eye on shares of Tesla. They're up 1.6% today, kind of stemming more of the recent decline. It's been on quite a ride since the November election when it initially skyrocketed. We're still off those all-time highs back in December. Let's talk to Colin Rusch about it. He's Oppenheimer's senior research analyst. Colin, remind me, price target stance on the stock. Welcome.
Yeah, we've got a perform rating on the stock, and we don't have, our firm doesn't have price targets on perform rated stocks. So we're neutral on the stock at this point. And, there's a lot going on with the company, in the midst of a much larger context. The two things that we're really tracking are what's going on with this core business with EVs and some concerns around a race to zero as Chinese competition starts to impact both margins and volumes on a global basis. And then the competitive landscape around autonomy. We think there's multiple players that are viable competitors to Tesla, and that there is going to be a mix of folks that actually participate in the autonomy future and monetizing that future here.
Right. So, we talked to Dan Ives yesterday, and he said, look, he sees the company adding another $1 trillion of market cap, in large part driven by autonomy. So you're worried about, the competitive threat, both from traditional EVs, just on the auto side, and about sort of the other players in that autonomy space. Is that right?
That's correct. So, we're looking at two other leaders in the space, Waymo, which obviously is getting a lot of attention given the success that they're having on the road in multiple cities in the U.S. And then, essentially the field of auto OEMs that are leveraging Mobileye's platform for driving towards level 4, level 5 autonomy. And these are very complex problems. The industry has been working on it for nearly a decade in a real active way. And we're getting close to some real serious breakthroughs for the industry around bringing autonomous vehicles to market. And as we look at that, it looks to us like we're going to see multiple players and that Tesla is not going to run away with this market. We do see them having some structural cost advantages with the vehicle production, given where they're at right now, versus a lot of the peers in the Western OEM space.
Sure.
But if they're not able to get the functionality versus other folks, it kind of doesn't matter on that front.
Although I was just going to add that, I have to imagine as autonomy becomes more widespread, even if that is a competition, it's got to just help the whole category, right? All of the players in it to some extent. What about his involvement in the White House? Help or hindrance?
It's interesting. We're tracking it pretty closely. I was just looking at a YouGov, a survey where his approval rating, or the folks that view him as very negative, has gone up 7% in the last couple of weeks. I think it runs a risk of alienating some customers and potentially some employees. It's something we're tracking pretty closely as we look at sales trajectory here through the balance of this year. We're a little bit cautious around what's going on in China. Their sales were down 11% in January versus the broader EV market being up 31% in the month. And so it's an ongoing, very fluid situation, but he runs some risk of becoming the face of some unpopular programs. And certainly there are some folks that are cheering him on here, but it will, I think, be somewhat negative in some of his core market of EV adopters, particularly in Europe and the U.S.
I asked Dan the same question yesterday. He said, I'm not sure he cares anymore.
Elon, I can't speculate how he feels, but it doesn't appear that he's super concerned. I think they're really focused on moving towards autonomy and an AI future. And our caution here around autonomy is just that there's a competitive landscape, that they're going to have to deal with, and we'll see how it plays out here. But we're not convinced that they're necessarily the only winner in that space.